So Hims and Hers had a horrible day yesterday, so today we're going to talk about why the stock crashed 25% and my thoughts on the current situation and if I was buying some shares yesterday. As always, we talk about when stocks go up, but on this channel we also talk about when stocks go down. So let's get started, guys. So Hims and Hers is now a $20 stock. It is down 24% yesterday, so yes, that is a crash. Anything above 20% is classed as a crash. So Hims and Hers stock did crash yesterday. However, sometimes context is key, and when you do look at the stock, it's still up 116% year to date. I might cry a little bit. Don't worry, we're still okay with this. Got to say in pre-market, you guys will see the result of this, but there's a little bit of a rally going on. We'll talk about why that's happening as well. But yeah, it lost 1.5 billion market cap. So you've got to think like something really big has got to go on with this company for that to lose that much. You know, there's got to be some serious concerns, and we'll see if that deserves to drop that much as it did yesterday. What surprised me here, a little bit of a surprise, I forgot about the EPS beat and how much it did beat by. The stock is actually now a 48 times earnings business when you actually look at the financials, you know, that we've just come off, the triple beat that we've come off, the guidance hike, 77% year over year growth, 48 times earnings. I tell you what, guys, I think that's a sign of where I think Hims and Hers stock is right now. Now the stock is bouncing up a little bit because there was a bit of an insider buy last night. One of the directors bought 5,000 shares of Hims and Hers, and there's always a lot of talk about Hims and Hers buying and selling of stock from the insiders. A lot of them do get paid by stock-based compensation. If you do get paid by stock-based compensation, you are going to sell shares every so often because you'll need the money. You know, you need the money for living, for buying a house, just costs in general. You might be having a child costs, you might be buying a new car. So that's why there's always quite a bit of insider selling going on inside the business. I always see like a lot of big deals made out of it. I've seen a big deal made out of it from when it was $3, $5, $7, $8, $10, $12, $15. I've seen it all the way through when the stock has been around going, well, maybe this is the top because insiders are selling. Insiders sell for many reasons, guys. They need the money for some certain things. There's only one reason why they buy, and the reason why is because I think the stock is going up. So that's probably why the stock is rallying it, and a few people trying to bottom dip after this dip that did happen yesterday. Now, the stock dipped yesterday because Amazon said they are going to be launching some low-cost telehealth service on the website, and some of these products that they were launching were the likes of ED and anti-aging skincare, men's hair loss, some of the products that Hims and Hers offer. So there's quite a bit to cover in here. First of all, a little bit of a shout out. A YouTube channel that I do like and I listen to is Beat the Denominator. He's a YouTube channel that covers Hims and Hers quite often, like me. It's really good to see a lot of other YouTubers now starting to cover this stock. I remember when I was covering it, 2-3 years ago, and a lot of people were panicking during that time when it was $3. Not much coverage there, but nowadays there's some decent coverage out there, which is great to see more people starting to cover this stock. I feel like the dad of Hims and Hers stock, and it's good to see some of these good new upcoming channels out here that are trying to break down what's going on. And I thought his breakdown of Hims and Hers yesterday was actually a really good breakdown. So if you do want to go watch a little bit more on this here, then there's your chance to go watch it. A little bit of a shout out, but I felt like he got this kind of spot on here. But I'll kind of come back to this and I'll kind of add my thoughts on top of what's currently going on with Hims and Hers and the launch of Amazon. So yeah, I mean, when the stock dropped, I originally thought it was something to do with GLP-1. I was like, oh, here we go again. But yeah, it was to do with Amazon. I mean, first of all, the volatility in Hims and Hers at the moment is crazy. Up and down, up and down. It's a day trader's dream, and I think that's maybe what's kind of going on here with Hims and Hers. There's certainly a few maybe day traders going on at the moment, and that's why the stock is being quite volatile at the moment. That's why I personally have been every so often just trimming a bit of stock shares when it does have some of these jumps, just locking a bit of profit, and then I've been buying back in cheaper, which has been absolutely amazing. But I actually saw this as well. There was a couple of downgrades that came out, and this was posted by Eli on the Discord yesterday, and he posted about the Bank of America. They upgraded Hims and Hers to $23, then $25, and then Hims posted earnings, which were a blowout, and it went up to $30. Then the Amazon news came out, and then they've downgraded the stock to $16, and that's all within 6 weeks. I mean, if you ever wanted evidence of the analysts to just don't know what they're doing, they're just following the stock price. That's it. If I followed analysts' share prices, I think I'd be bankrupt by now. So yeah. Anyway, let's get on to this Amazon news. So yeah, obviously Amazon entering this space. Not entering this, I think there was a big boom about, Amazon entering Hims and Hers space. Well, They are from a little bit more of a competitive point of view, but let's not forget Amazon have been in the healthcare sector for many years. Obviously, they used to have, what was the old segment called? Amazon Clinical, and then changed it to Amazon One Medical. They had a bit of a name change. I think the reason why is just because they were struggling. This is something that they've been in for like a good kind of 3 or 4 years now. And Amazon have shut down like a lot of their healthcare segments because they have really struggled with it. It's not been easy work for them. So it's not something that Amazon has had previously much success on, which is probably the key thing to point out. And this isn't something that's come out of nowhere. We've known that Amazon have been in the telehealth space for a very long time. The only difference is that they've launched a couple of new products that are a little bit more price competitive to the likes of Hims and Hers. So let's not say that this is, whoa, where did this kind of come from? We kind of knew this was going to happen at some point and they were already here. It's just when they were going to be a little bit more competitive to Hims and Hers. Now the concern with when Amazon comes into your area is that Amazon's a killer. As soon as Amazon comes in, panic stations. They're a strong company. They're probably going to beat you. I think that sometimes that misconception spreads a little bit with Amazon and that they're just, you can't beat them. I think that came from like the e-commerce space, because when you look at Amazon and how they had so much success with the e-commerce space, is that Amazon disrupted it because you would have to just you could stay at home, go on a website, look for the products you want, click it, buy it, and it'd be delivered in 2 or 3 days time. And obviously now it's 1 day's time. And that was the disruption. You didn't have to go out to the shop. And as the delivery got faster and faster, they got even more competitive. The big advantage of using Amazon traditionally as an e-commerce play was that you buy it and it gets delivered super quick. You don't have to leave the house. It was efficient. That's why they did so well in like a delivery point of view. The difference with this is that with Amazon and its healthcare, and this is maybe why it struggled with its healthcare segment, is that it doesn't actually benefit you from a speed point of view. So the big thing that they've always had success on is that we do it fast and quicker than everybody else. With this, not so much, because when you are getting some of these treatments, and let's not forget, I remember a few months ago and all that, people were saying, it doesn't, it was all about the GLP-1, and then the GLP-1, the stock was moving up on 4% revenue, and then people saying, it doesn't matter about ED, it doesn't matter about hair loss, and then all of a sudden, this is a big thing where he's got to lose 25% of the value. I mean, when we're going to just go that Hims and Hers is actually a diverse company, when you look at the weight loss segment now, when you look at the mental health segment, when you look at all these treatments they have, it's more than just like one product, guys. This is the great thing with Hims and Hers. It has a moat. It has a lot of products now, by the way, and let's not forget that. That's something that's not really mentioned on this article. You'd think that this was the whole business of Hims and Hers. But anyway, getting back to my point was that it's not as quick service as you'd think. You've still got to go and get a telehealth appointment. You still got to order these products and you got to get them delivered. That's exactly the same service that Hims and Hers have right now. Is the convenience of having a telehealth appointment. It's exactly the same with Amazon. You still need a telehealth appointment and then they need to get delivered. So there's no time difference. That's the big benefit that Amazon's always had, is that we do it quicker than everybody else. Well, when you compare Hims and Hers to Amazon, both you need a telehealth appointment, which both are on your mobile phone, so they've got no benefit on Hims and Hers there. And then you need the product to get delivered, which Amazon and Hims, there's no competition there either. So there's no like, Amazon are better than Hims, because it's exactly the same. So Amazon has not got that edge here with Hims and Hers. And the other thing as well is that I think people are trying to make it look like it's a cheap product. Well, it's not really a cheap product. When you look here, you're paying for nearly $16 a month for hair loss, or $10 a month for anti-aging skincare, or $19 a month for ED. There's not much big price difference here, and this is what Beat the Dominator also goes on about here, is that it's not actually that much cheaper than where you are with Hims and Hers. Like, there's no pricing competition power here. A lot of Hims and Hers products are exactly the same. And obviously with Hims and Hers as well, you're getting multiple healthcare. You're not just getting this one healthcare option, you get the personal care. So in fact, with the telehealth option, you're better with Hims and Hers because you're getting more healthcare options with them than Amazon. And with Amazon as well, there's all these hidden costs as well, because they're trying to, at the moment, they're trying to go, as low as so-and-so and low as so-and-so. But as Beat the Denominator called out as well, is that it's not that simple with Amazon. Because when you look at Amazon, you have to pay all that, but then at the same time, you need to pay for Prime. So you got to pay for Prime, which you're talking another $14.99 a month. As well as that, you've got to pay for the treatments, okay? And then you got to go pay for a telehealth service, which is either $29 by video or $49 payable by credit card or using Flexi spending account. or video visits. So it's not as cheap as what you think here. You know, you got to pay for the treatments and the visits on Doctor Virtually, and you got to pay for your Amazon Prime account. It's not all that good, guys. You know, it's not all that good. You know, Hims' pricing ability here is still coming out quite strong against the likes of Amazon. You know, if you ever to look at some of the Hims and Hers products, they're not too badly priced at all. So with Amazon, you know, the big success they've always had is that they can do things quicker, which they don't have on Hims and Hers right now because it's exactly the same. And also they can do things cheaper, which is not really the case here at the moment. In fact, it's probably in Hims and Hers' favour. And that they are, you know, you got normally you go on Amazon and you got all the product selection. Well, Amazon, yeah, you got a couple of product selection, but Hims and Hers has bigger product selection, and because they're founder led, because this is what they do, they're bringing things to the market so much quicker. You know, you look at like the edible GLP-1s that they're going to be bringing out next year. They're able to make products and change things a lot faster than what Amazon will ever be able to do from a healthcare point of view. So, granted, there's a threat here. You know, whenever competition comes in, you know, especially someone like an Amazon, it's like, yeah, fair enough. You know, I can understand there's a little bit of concern out there. Maybe the stock drops. To lose 1.5 billion of your market cap to be down 25% yesterday was ridiculous. It shouldn't have happened. That's like, oh yeah, that's game over. That should not be happening with Hims and Hers, especially with the numbers that they've just done and, you know, the valuation they're at as well. You know, if we talk about a rich valuation here, yeah, maybe, okay, I'd get a 25% jump. If we were at 200 times earnings, I might have got it. We're talking about coming down at 45 times earnings, guys. It's going at 77%. It doesn't make sense at all. And if anything, I think this is probably one of the bullish case for Hims and Hers is that if Amazon's coming into this space, like even they're looking, going, look at this healthcare, like, this is a big area here. Like the market potential is massive. We need to get in here. So if anything, it's probably a good sign for Hims and Hers. Like, yeah, you know, there's a big demand here. If Amazon are willing to put their money into kind of expending, you know, going here, the TAM's massive. The TAM's going to be absolutely massive. So it's probably even a bonus for Hims and Hers that Amazon are coming in here. Like even they're recognizing how big it is. And yeah, I mean, I don't know. I think that, you know, maybe the best bet for Amazon would actually to be go out and buy, you know, Hims and Hers. That'd probably be a very good addition for them and launch that onto the platform. I mean, if they were to buy Hims and Hers out, I mean, the premium they would have to pay would be mega. I think you'd be looking towards like a 15 billion valuation, which as a shareholder, I mean, I'll take it because a Lamborghini in my driveway would look really nice. So I would take it. But yeah, I just think the reaction was a little bit too much. You know, you look at the healthcare TAM, the addressable market, it's huge. So there's a room for a lot of players in here. It's not just going to be Hims, as it is now, to be fair. But also, you know, you look at all the healthcare segments that, you know, there was a lot of noise on these industries that they're entering at the moment. But let's not forget, you know, Hims and Hers. Everyone just talks about the GLP-1. Oh, it's over because the GLP-1's gone. And now they talk about the ED and hair loss side. Well, Hims and Hers is in multiple categories now, guys. So if one of them actually doesn't work out, it doesn't really matter because they're expanding that much now that the rest will cover it. But I think they'll be absolutely okay, so don't worry about it. And I think even so, at 48 times earnings, even if they did lose market share, I think at 77% growth, this is cheap. You know, I think that even if this was growing at 30%, I'd say that this valuation is cheap. There's no inside metric at the moment that I have this company growing at, you know, when I do the numbers, I have this company growing at 20% a year. So I think there's a lot of like leeway for this company here for even if there was a bit of market share loss. But I don't even think it's that. I think the threat of Amazon was way overplayed yesterday. I mean, let's take 25% off the market cap when we actually have proof that they're a competitive threat. You know, that would be the big thing. That would be the more impressive thing. So, yeah, overall, my thoughts are, yeah, it was a ridiculous drop. I bought some shares yesterday. I thought, you know what, bit of a pullback, stupid drop. Looking at the valuation, it's still pretty good value in my opinion. You know, one of the growth stocks at decent values. I bought some shares yesterday, and yeah, I think I mean, it might be a risk. You know, I'm not going to rule it out, but I think a 25% drop yesterday, and they've got a lot to prove. And there's room as well for competition here as well. I thought I'd buy some anyway. Hope you enjoyed the video, guys. Have a great weekend. I'll probably see you on Sunday. I might do a Sunday video. If not, I'll see you on Patreon as well, guys, if you're on there. Thanks for watching, guys. See you in a bit.